Today we'll be focusing on the week ahead, looking at the key event, which will be the UK interest rate decision. As we look to the week ahead for markets, there will be a number of events that will be key for focus and discussion from the team on morning markets. Firstly, and I think the most important event this week is likely to be the Bank of England's decision on interest rates. As we all know, UK interest rates currently 5.25%. There is no expectation, or limited expectation, I probably should say, that the bank will make any change at Thursday's meeting. That's from a number of factors really. One, the inflation backdrop, but two, also that they don't want to be seen as being political, making an interest rate change in the midst of the electoral campaign. However, that's not to say that a change may not happen. We have inflation data on Wednesday, which will certainly play into and may influence how the Bank of England want to think. I think probably safe to say we'll see more people leaning towards an interest rate cut, but not sufficient for a cut to come through on Thursday. The market thinking about a cut towards the end of the summer for UK rates. Into the US then, what can we expect there? Well, certainly over the past couple of weeks, it's been a much more heavy data calendar. That slows down quite a bit this week. We've got a holiday in the middle of the week in the US. If we look at the information that is likely to come out, I think the main focus will be around retail sales, retail activity. That's certainly been a key focus over recent months. There's been some signs of a slight moderation in the strength that we had been seeing in the consumption environment in the US. And certainly we'll look for that in the data this week. And that comes after the inflation numbers from last week, both CPI, consumer price inflation, and producer price inflation, which were more favourable. So maybe a more favourable inflation backdrop, a slowing in the consumer, it may bring forward the potential for interest rate reductions in the US. We heard from the Fed last week, very much focused on one cut for 2024, but if that data continues to point to a slight slowdown and a slight weakness in activity, it might be that we get further interest rate cuts or that the market moves to price those. This morning then, turning to China, data there really mixed. It's been a real conundrum, China, for markets, but also I think for policymakers in China, both the government and the People's Bank of China. This morning, rates left unchanged in terms of that medium-term lending facility, but really contrasts within the data. Retail activity slightly better, so a little bit of a pick-up there, albeit when we look at the year-to-date number, pretty much unchanged. The real challenge continues to be industrial production, which slowed a little bit, but also the investment backdrop, the housing market backdrop, and the challenges of the weak housing market in China continue to be very evident. So fixed asset investment continues to be a challenge. Indeed, I think the data there is such that over the coming months, it might become more to the fore that we hear the People's Bank of China joining into other central banks and moving to reduce interest rates. I'll leave it there for today, but please do join the team over the course of the week when we'll be discussing those key events for asset markets.